Hey, what's up, good people? How you doing? Welcome back to Stock Up with Larry Jones. Hey, just go ahead and do it. Hit the like, subscribe, and notification bell. If you have not subscribed, go ahead and subscribe. If you are subscribed, hit that like button. The earlier you do it, the better. It helps the page out. My name is Larry Jones. For those of you that are new to the page, anything I say is not a suggestion for you to buy, hold, or sell. And please don't fall for spam in the comment section. Hey, I took a little time off to be with my dad today. We have to take care of our parents and spend that precious time. My dad is a pastor, and I just spent some quality time talking to my dad. Hey, let's talk about what's going on in the market today, right? So we know that earnings is. Remember, we were talking about how earnings is what is moving the market short term, right? But over the market, what has an umbrella over earnings is the Fed. We all know that by now. So we know last night Google, Microsoft, I believe tonight PayPal, Meta, which is Facebook, those are reporting, I believe, at closing bell. Correct me in the comments if I'm wrong. I know somebody will. And so yeah, these earnings are just you know they're decent. If you take the supply chain disruption, the supply chain out of all of these earnings would be great, right? And so what forward expectations have been lowered now on these, and that's what's causing these to kind of come down a little bit. Forward expectations, right? And so overall, they're pretty decent, but in this environment, you could have a pretty decent earnings, and it's just not that great. Like Google last night, with YouTube. YouTube, Google owns YouTube. And, that has failed because it was growing by like 51%. The ad revenue that they make on platforms like this, YouTube, which is owned by Google, okay? And so they're not as aggressive. So they're less aggressive, right? And a lot of things, even technology, has been hit by the supply chain. And then we know about the rising cases in China, and the shutdowns in China is making things worse. So that's why a lot of these companies, their forward projections, they're kind of pulling back on it. I'm looking because I want you guys to see where the market is going to close at in 50 seconds. Let's just take a look right now, good people. Let's just go over here and look at these last 45 seconds. I'm recording this right at closing bell. And as you could see, they're talking about Boeing's. Boeing is not doing well today. And they have fixed costs. So like with Air Force One, they had, they said, hey, this is how much we're going to build the plane for, right? But they wasn't expecting all of this high inflation. And so now they're losing. Okay, let's just take a quick listen. So, so you guys see where it is. I would say if you put yesterday in, I wouldn't get excited about today. I'm going to keep this one real short because tonight, myself, Stockmo, and Keenan Grace will be giving you guys a lot of great information. We are going live tonight. I'm going to leave the announcement in the box here. I want you guys to click it and be ready to log on. So it will be on tonight at 7 Eastern time. But if you're in Chicagoland area, that will be 6 p.m. New York, it'll be 7 p.m. And I believe LA, that'll be like 4 p.m. 4, 5, 6. Yeah. So if you're in LA, it'll be like 4 p.m. Chicago, 6 p.m. And New York, that will be 7 p.m. Keenan Grace, Stockmo, and myself. I love it when we get together, okay? But let's just talk about the overall market, and I'm going to wrap this up. Listen, here's what I think for the whole year, and I've been saying it, but I just want to be crystal clear. If you are dollar cost averaging, continue to dollar cost average. And people have been asking, hey, what if you see that the market is going to go down. Should I continue to dollar cost average? The answer is yes, because if you stop, it kind of defeats the purpose. But here's a big but. There's always a big but in the room. I like big butts and I cannot lie. You guys know that song. So here's what I'm going to say to you guys is this. If you are, especially if you're following my $5 a day challenge, okay, which means for some of you it's 10, 20, 30, $100 a day, depending on your budget, right? What I'm saying to you on, you could literally see that a week is going to be bad or 2 weeks is going to be bad. And you could literally just kind of hold your dollar cost average for those 2 weeks. And then when the market tanks like it did earlier this week, then you buy, you catch up on that day. You can do stuff like that. The fact is the longer, but you want to have some sort of consistency. Okay. So let's say you make your deposits on a Friday for your $5 a day challenge. The stock that you are dollar cost averaging in for the next minimally 5 to 10 years. Okay. And let's say you do it on Friday and it's Wednesday or Tuesday and the market tanks, then loan yourself the money and just buy that whole week on that day, because we get excited about the red days over here because we're dollar cost averaging through, because we're going to dollar cost average when it runs up. We're going to dollar cost average when it goes down. We're going to dollar cost average during the recession. Because the fact is, as if you look at your DCA and it's red right now, just look at your dollar amount and see there's 2 reasons why dollar cost averaging work. Number one, the sooner you get in, the better. You cannot out-time the market. Time in the market is going to be worth more than trying to time the market. You're going to make more money long term. The second reason is you would have drunk that $5 a day away at Starbucks. You would have just done something else with it. So the sooner you start with dollar cost averaging, the better you will be. We're going to be diving into that much deeper on another video, because anyone that's listening to me has the opportunity to be a millionaire with your current pay. And it's just what you do with your money. And all you really need is a steady income, is to be consistent and patience. That's it, good people. So I will end by saying this is where I see the market. I see, so we got January, February, March, and then we had April, right? So we got May and June. May's Fed meeting and June's Fed meeting. May's CPI numbers, consumer price index, and June consumer price index. So we got 2 months of 2 reports, the CPI and the Fed telling you how much they're going to raise the interest rates, right? So we have that for the month of May and we have that for the month of June. I believe that those will be the 2 most volatile months for this year before we start seeing peak inflation. So that's what I see. This is only a prediction. Anything could happen. So if you want to just continue to save your DCA money, your dollar cost average money, you can just do that and buy it after May's report, or buy it on the 1st of June's report, right? Or you can just wait until after that and just dump all the money in, right? But no one can time the market. Anything could happen. The market can literally price everything in after next month's report. That's why the best thing to do is to continue to DCA, because you're truly trying to predict the market, okay? And you guys know that I have links below in the 2. One is Webull. Webull, what we're doing in Webull, we're swing trading stocks and crypto, right? So we're swing trading our stocks and our crypto in the with the Webull app. I have the link below. Click my link so you can get some free stock worth up to $9,600. But we're adding Moomoo to that. Moomoo is simply where we are cashing up and getting ready for the recession whenever it comes, and it is coming. So we're using Moomoo to cash up for the upcoming recession. So if you've been investing $5 a day, I want you to save $5 a day. If you've been investing $25 a day, I want you to save another $25 a day. And I want you to do that in the Moomoo, because when the recession happens, that's when we're going to deploy all of that capital that's in the Moomoo. Now, we're going to do some things with that capital before the recession, but we are going to make sure we have what? Dry powder to come. And so we're going to have 2 different trading platforms, because it's easier to make money when you know how to go to what platform for what. All right. So, hey, those are the links. I want you to look at them and click those beneath and deposit them in Moomoo. I want you to deposit $100 because you can get up to 6 free stock and 5 free stock. And each one of those could be worth up to $3,500 if you don't have it. Take advantage of the free stuff on both of those tonight. Join Stockmo, Keenan Grace, and myself. All right. Make sure you guys click that link, and so you can get your warning about tonight. All right. We'll see you in a few hours. Live, love, laugh, and learn.